right, we're going to get started here. We are recording. If you want to ask any questions, you can ask in the chat box. Everyone's muted and videos are off. We have all the privacy settings on, so you're not able to see the other attendees at the moment. So tonight we are talking about how to flip properties. Very, very popular thing, of course, with everything on HGTV and all those kinds of things. How do you flip a property? So we're talking about flipping properties. What are we talking about? We're talking about really three particular strategies. One is I buy a home, I fix it up, and I sell right away, within a short period of time, a few months, 3 to 6 months or something like that. The other way that I might look at it is buying a home, fixing it up, and then holding it, or what's called burning it. So that means that I'm going to buy a home, fix it up, and then I'm going to then turn it into a rental property. That's called, you'll see a very popular strategy now, it's called BRRRR. BRRRR means to buy, rent, renovate, refi, and repeat. So in this type of strategy, you would buy a home and you'd be able to keep repeating the strategy over and over again. The other way would be buying and selling and property hacking. So we're going to talk about that too. That would be something where I might buy a property that maybe has some acreage attached to it. Maybe I'm going to sell off a piece of the acreage, or maybe I'm buying a house that could be a duplex. I'm going to sell half of the duplex, something like that. So let's get right into it. So let's give some examples of what we're going to be looking at and how we can do it. So let's say I buy a property worth $400,000 and it needs some work. Maybe it's purple sinks and purple kitchen, and maybe it's got old exterior, whatever it is, but whatever, the totality of the work is $50,000. And after I do the work, so after it's complete, the home is worth $600,000 when I'm done. So it's going to cost me $450,000, $600,000 when it's done. Now, the first thing to know is when I flip a property that needs some work, the one that the numbers are going to work for, no matter what anybody tells you, that is going to be unfinanceable from most regulatory institutions. It means that the home is going to have some type of depreciation. So it means it's too old and dated, that's not considered marketable, or it's going to have some type of repairs that are needed on the house that would mean that it would not be financeable in its current state. Maybe there is, maybe it's been a hoarder's home, or maybe it's got maybe it's very beat up and very run down or something like that. That would be ideal property, but that's not financeable on an A-type lender through a bank or a credit union or anything like that. So that's what that would look like. So how that works is that we would generally allow 75% of the value. So if you're buying a home and we have based on what it's worth after it's done. So if it's going to be worth $600,000, we are going to lend 75% of that. 75% of that is going to be a situation that where we would lend $450,000. So we done $450,000 towards that. So you can see there was some creative financing. It's very possible to get in with very low costs. So we're going to lend the money based on what it's worth after it's finished. Now, I should disclaimer this, that no matter what project you buy, we're going to come up with very creative solutions on any type of project that might vary from person to person. The cost of some of this is I'm going to have to think about some legal costs. I'm going to think about the fact that a loan for this is going to involve 2 sets of legal fees. So instead of the $1,500 legal fees, I'm going to look for $5,000 in legal fees. I'm going to have to look at renovation costs. What is it going to cost me to renovate the cost? You need to make these costs as firm as possible. You know, one thing that people run into, and we're going to touch on this in a second, is they run into a situation where somebody has a problem where, you know, they get a rough quote from a contractor. These need to be as firm as possible. If your work balloons from $50,000 to $125,000, you could at best lose your profit margin. At worst, you could have a situation where you're in a lot of trouble. So make sure that renovation cost is very, very firm. You know, even if you're putting a buffer of 20%, you have to really get that number right. Financing cost. So when we're doing a loan like this, we're probably doing something in a lot of cases where we're going to be, we'll talk about this in a second, we're going to be charging some higher interest. So you're going to want to manage at the time, what is going to be if I'm taking a renovation loan out and I'm going to carry it for 6 months, what's the interest cost for 6 months? And then usually we're going to charge a fee on top of that. So that might be, you know, roughly some of this, that could be $20,000. So $20,000 is going to be my financing cost. And then realtor costs or marketing costs. When I resell this property, I'm going to sell quicker with a realtor. So calculating those costs in. So be very sure and very firm of your costs. A lot of people mess this up by not taking it, not understanding costs. So that's super, super important from that perspective. Sorry, we lost our window there for a second. Okay. How would we get, oh, we run too fast. Here's another situation we want to talk about. What if we buy a property that's worth $400,000, but it's 2 acres? And that 2 acres is subdividable. So I finance the property and I'm going to pay $40,000 in fees to subdivide it legally. And then I'm going to sell off 1 acre for $200,000. This property could be financeable in this unfinanceable situation, but same thing, we can lend 75% of that value and we can lend you the money to reno the property and go from there. So that is an important thing as well. So that we could, someone in that situation, they may do 1 or 2 scenarios. They may sell off each piece individually, the house with 1 acre or the 1 acre, or they may keep one portion and sell it off to significantly reduce their mortgage. And so that's something that really could be considered at this point. We're looking 75% of the cost. You got to really know your legal costs, really know your renovation costs. In this case, it's not a renovation cost, but the cost of subdivision. You don't want these costs to be estimated or anything like this. How long do I have to carry the financing for? How long is the time period? And then realtor costs and marketing costs. Now, generally, when I do a project like this, I might, do a custom-made strategy for a client. We're gonna do it step by step. You're gonna do this, it's gonna cost you this, and all that type of thing. Big thing around flipping properties is how do people get the down payment? So one way we could do it, remember we're talking about only letting 75% of the value of the property, is other properties. So if you have equity in other properties, we're going to put a second or a lien on another property and we're going to use the equity on that, no cash in the deal. You can use cash or other investments. So there is some ways even of taking RSP and leveraging RSP against a property without liquidating it. Other investors, now you when you're doing flipping of properties, you may present, hey, you know what, I'm offering an opportunity for a lot of people to put $10,000 in with 6 months down the road, it netting you 15 grand or whatever it is, or you may draw up a plan. And when we talk about other investors, we're not talking about super sophisticated people, but their family members and other people that that could be involved. You can also do something called vendor financing. So you'd say to the vendor, I'm going to buy your house for $100,000, but I'm going to give you $75,000 in cash. But the $25,000, you're just going to have to wait for 6 months. And because of that, I'm going to pay you interest on a 6-month time period. We've now started an additional thing that we're launching called Submit for Investor website. And so basically we now have a page. If you are looking at a project or doing any type of investment or rental project, you just simply submit a form and we start to put together a financing package for you, which may involve some of the other things on this process. Here's a few pitfalls to know when it comes to flipping property. So know your numbers. I can't emphasize this enough. Rough quotes will murder you. When we see people saying, oh, it'll be approximately $10,000, you have to be very, very firm and still add, 20% contingency. The other thing that people really get messed up on, we see this a lot this year, is rough quotes will murder you, but time will be your poison. So the longer it takes for you to renovate the property and move it to whether that means holding the property or selling a portion of the property is the longer that's going to cost you something. So 1 extra month in expenses will significantly eat away at your profit margin. So do not estimate, confirm and multiply. Confirm and multiply. I made a little bit of a typo there when it comes to multiply. Stay away from big fixes. Be very reluctant to take on stuff with mold or vermiculite or foundation problems. Those things that you cannot see unless you have pretty meaningful experience will not will often mean that you're in a situation that's very, very stressful. The last thing is confirm value in 3 ways. What do I mean by that? When I buy a property and the situation is such that I want to know what it's worth in the end, I should confirm the value 3 ways. That's 3 realtor opinions and appraisal. Don't just rely on one opinion. These days, we see people come up with value on 1.8, make sure from the value 3 ways. So with that, I will open up and then go from there. Okay, perfect. Yeah, we will be posting this on our YouTube channel. As far as our YouTube channel goes, we have lots of resources there that are very helpful as far as different strategies and mortgage tips, and we're posting stuff there every day. So a lot of really helpful things there as well. We put in our client newsletter the link to how to submit to financing. So that is something to that also we could, we can definitely we can definitely do as well. So, okay. Perfect. Thank you so much for your time tonight. Again, shout us for any mortgage needs. If not, thank you much and have a great night.